Welcome to The Explainer. Today, we're unpacking two major forces moving the markets right now, a truly historic event in the world of crypto and a subtle but incredibly powerful signal coming out of China. Okay, let's dive right in. It all starts with something pretty unprecedented happening in the Bitcoin market. We are talking about the largest options expiration event in its entire history, and it's all going down today. So, we'll tackle this in 5 parts. We're going to start with the specific event in Bitcoin, then we'll zoom out to look at a huge macroeconomic force, and finally, we'll connect all the dots for you.
So, what exactly is happening today, December 26th? Well, it's a day that a lot of traders have had circled on their calendars for a long time.
This isn't just a regular market day. Imagine a coiled spring. For a while now, that's kind of been Bitcoin's price, held down by a record-breaking number of options contracts on big exchanges. Today, those contracts are gone, and that spring is about to be released. The sheer scale of this is removing a massive technical pressure that's been weighing on the price. So this leads us to a fascinating concept that market analysts are calling the liberation of Bitcoin's price. What happens when all that pressure just disappears? Let's see how this builds. Okay, so to really get why this is a liberation, you first got to understand the cage it was in. See, the dealers who sold all those options had to manage their risk. It's called hedging. It basically means if Bitcoin started to rally, they'd have to sell to cover their position. If it dipped, they'd buy. It acted like invisible walls, artificially keeping the price stuck in a tight range. You can really see the difference here. Before today, the market was basically in a straitjacket. Every single time Bitcoin tried to make a big move, up or down, these dealer hedging flows would kick in and push it right back into its box. But now, poof! With those options expired, the dealers don't need to do that anymore. The straitjacket is off, and the price is finally free to move based on actual organic supply and demand. So the big question is, what happens next? Well, with the price now liberated, analysts are looking at 3 main paths. It could break down below 87,000, or it could just move sideways for a bit, kind of form a new base. But the scenario that's considered the most probable, especially with other factors we're about to get into, is a bullish break above that key $90,000 resistance level, which could open the door to $95,000 or even $100,000. But here's the thing. Bitcoin doesn't exist in a vacuum, right? To really understand why that bullish scenario is favored, we need to zoom out, way out, and look at a huge, kind of hidden force in the global markets, liquidity from China's central bank. $1.4 trillion. Just let that sink in for a second. That is a staggering amount of money. And when China's central bank injects that much liquidity into the financial system, it tends to lift all boats. We're talking the S&P 500, gold, and yep, Bitcoin too. So how do we know this is happening? You don't have to take anyone's word for it. The clues are actually hidden in plain sight. You just have to know where to look. And in this case, the story is told by the behavior of China's currency, the yuan. It's like a little bit of market detective work. Okay, so here's the puzzle for you. China has this enormous trade surplus, right? They sell way more stuff to the rest of the world than they buy. Now, basic economics tells us that should create huge demand for their currency, which would make the yuan incredibly strong. But is it? And here's our first clue. When you look at the yuan against the US dollar, it's not showing that strength we'd expect at all. In fact, it's been surprisingly weak, or at best just moving sideways. That just doesn't add up with their powerful trade fundamentals. It tells us something else is going on under the surface. But this is where the story gets really interesting. This is the revealing clue. When you stop measuring the yuan against another paper currency like the dollar, and instead you measure it against a real hard asset like gold, well, you can see it's been absolutely plummeting. And that right there, that is the smoking gun. A currency doesn't just fall off a cliff against gold by accident. This is a crystal clear signal of massive liquidity injections by China's central bank. They're effectively increasing the money supply, which devalues their currency against hard assets. All right, let's bring it all together. How does this massive macro story from China connect back to what's happening with Bitcoin on this historic day?
It's a pretty clear chain of events when you lay it all out. 1. China is pumping massive amounts of liquidity into the global system. 2. That wave of cash pushes up the value of major assets, stocks, gold, you name it. 3. At the exact same time, Bitcoin is being liberated from all that technical selling pressure we talked about. So what do you get? 4. The path of least resistance for Bitcoin appears to be up, supported by this powerful macro trend.
I mean, this quote really sums it up perfectly.
You have this rising tide of global money meeting an asset that has just been unshackled. It's like a perfect storm brewing, creating a strong case for upward momentum.
So this leaves us with a final, pretty big thought to chew on. In a world where central banks are constantly and quietly shaping the markets, could it be that the price of liberated digital assets like Bitcoin is becoming one of the clearest signals we have for what's really going on with global money flows? It's a question we're thinking about.